Good morning to you all. Listen, an amazing thing I want to tell you about happened on our stock market yesterday. It went up. Now, not just up, but up in a big hurry. In fact, such a hurry that the All Ordinaries Index of Australian shares is now within cooee of its highest point since the global financial crisis more than 9 years ago. Now, the All Ords starts this morning at 59.48. It hasn't been above 6,000 since January 2008, when it was on the way down, as you can see here, in a very big hurry. The high point was November the 1st, 2007, 6,853. That's when iron ore was above $150 a tonne, when oil was above $150 a barrel. Australia was flying. The low point, 3,111 in March 2009, when in hindsight, if we weren't all too frightened, we should have been buying like there was no tomorrow. That was around the time Lehman Brothers collapsed in the US, when politicians here and around the world borrowed like never before to prop up banks and financial systems. And those trillions, remember, still have not been paid back. The market now, rightly or wrongly, is pointing to better financial times, most likely off the back of the improved outlook in the United States. Yesterday's market spurt came late in the day, and it's odd because iron ore had fallen 7% on Friday. It's now down 20% since February, so technically our share market should be going down, not up. What's even more odd is that BHP Billiton, our biggest iron ore miner, was the company leading the charge. Its shares yesterday up 4.6%. But it wasn't iron ore pushing BHP, though. It's one of its biggest shareholders. Now, this bloke, the US billionaire Paul Singer and his Elliott Management hedge fund, went public with a plan that BHP should be split in two. It claims by hiving off BHP's petroleum assets, the most valuable of which are in the Gulf of Mexico, it could raise BHP's price by 50%. Now, BHP itself put out a statement last night saying it's had dialogue with Elliott over many months and has concluded that the costs and risks of its proposal will significantly outweigh any potential benefit. The shares should fall today, but don't for a moment think this idea will go away anytime soon. Let's go to the markets this morning, and what we can see first up is the Aussie dollar. We got below 75 cents, just above that this morning as we speak, 70.8 euro cents as well. Have a look at commodity prices. Oil prices, $53.10 US a barrel, and the share market in the United States has closed up by just 1 point overnight. Yesterday, you can see our All Ordinaries Index off the back of BHP up by 46 points.